Welcome back to the channel. I'm Crypto Trend Trader, and today we're going to be taking a look at Bitcoin on the longer time frames. But before we get started, I'd like to remind you it's not financial advice. I'm not your financial advisor. These markets are extremely volatile, so please trade responsibly. Alright, so here we have Bitcoin. Right now I have it on the weekly, and this is the Coinbase chart. And essentially what we're trying to look at now is the long-term trend. I feel like we're at a key point in the market now where essentially um, if you look back here all the way up, you'll see the blue line on the TD MACD gives you the blue all through here. You know we're in an uptrend. And like we were discussing, once we start seeing these flashes on the histogram here, and I get like more than 2 or 3 in a row, you can say you're in a downtrend. You can also use that in confluence with the moving averages. But essentially, like the final point is once this histogram passes below the blue line, or once the blue line switches to a red slope, you confirmed in a downtrend or a bear trend. So you'll see basically that was this whole area right here, and then we went down capitulation, and then we got all the way back up here. We turned the histogram blue again right before that big burst to the upside at 4,000. So that was essentially us going into a long uptrend again, and you'll see a similar signature again. We had the blue, we had the green histogram over top of it, and then we started getting the red histogram. And once you get 2 or 3 in a row, you can confirm you're now entering into a downtrend until you see otherwise. So there you have a very similar signature. What I expect will happen next is we'll get this red histogram. It's going to pass underneath the blue line, and then we'll get the red histogram, and then eventually again a capitulation, and then we can start entering the next phase of the cycle. But this tells me that over the last few weeks that we have entered into a downtrend. And now we're going to do the same thing with on balance volume as well. You'll notice it was purple and red down here, turned green all through here, which meant we were getting increasing volume. And then once you'll see, let me zoom in, once you'll see this was around the top, volume started tapering off. It doesn't necessarily go down, but eventually we get underneath the green line and we turn it red. And you'll see that was basically the capitulation. That was the very bottom here. And now you'll see what's happening again is we've now gotten the signature underneath here, similar to like this here. And then what will happen is if we can stay underneath long enough, it will turn this red again, and essentially we'll enter into a similar phase like this right here. So one might say that we have another candle down and that we're actually capitulating currently, and that we could end up somewhere around the 6,000 range and then rally from there and continue upwards. Or one might say that we're going to head lower, or at least down to retest the lows. And then moving averages going to do the same thing with them. You'll see when they're sprawled out in the correct order, the 10 red, the 21 yellow, the 50 in green, and the 89 in purple. When they're all in order like that, you're in an uptrend. And then once they start flaying out backwards, you get the red below the yellow. That's your first signal that we're entering into a downtrend, and you'll see we slowly get them below and below. But on the weekly time frame, the 200s are not even relevant yet. I'm going to switch really quick over to the monthly time frame now. And you'll see same deal. We're not going to get populated with as many moving averages, but as long as the red's on top, we're in an uptrend. We basically barely get into a downtrend here, enter back into an uptrend here, and now what I suspect will happen is if we lose this support here, we'll find support on the 21 at $6,700, and then eventually we can drop down below that down to the 4,400 range and find support on the 50-month. And then same deal over here with the TD MACD. We're not going to get populating the slope line, but you'll see we had all through here the green histogram was positive, all through here it was negative, or red rather, and then again all green, and now we switch back over to red on the monthly scale, so we're likely to see continuation to the downside. And then again with the on balance volume on the monthly scale, this is the first time that we've ever actually turned this line red and sustained it, maintained it. So you'll see even down here we were getting a red slope on the unbalanced volume, and then we finally picked up and had that burst to the upside. As we're right here, we're now crossing it over, we're getting the red slope, we're getting the downtrend, and it is likely that we see a substantial correction from here. And again, that is on the monthly time frame. And now I'm going to switch over to the daily time frame and just take one final look here before we discuss something else. And you'll see that in this daily time frame, you're going to get a lot more signatures, a lot more signals, but you can follow them just as good. So you'll see we had the blue all through here. You're in an uptrend. You could have took profits here before this dump, reaccumulated through the bottom, picked it back up, and then you would have got out at the top. Could have reaccumulated for this bounce, got back out, and then here's when it starts getting sketchy, when it's like a real heavy accumulation phase and it's flipping back and forth. It's very hard to take the signals because it takes so little to change the slope. But again, you'll see on balance volume switching back over to red and getting ready to head down. TD MACD already heading down, and you'll see our moving averages. We already have the 10, the 21, and now we're about to get the 50 crossing below the 90. And if we continue down in the same manner, it's just a matter of time before we do in fact get the death cross on the daily. We already just got it on the 12-hour. So again, we may see some kind of bounce here. But honestly, I think a lot of people are expecting a bounce, or expecting this thing to turn around after this correction, and I don't think that's as likely. So now what we want to talk about after looking at all those things is change in trend. So what happened here is we were in an uptrend for a long period of time and all through here, and then once that red went under the yellow, or whatever signal you want to use, once you see 2 or 3 of these histograms, once you see the red below the blue, whatever your signal is for long-term trend, you need to have that very clearly identified, and then from there you can tell, am I in an uptrend or a downtrend? Because part of being a crypto trend trader and trading with the trend is only trading in the direction of the trend. And the idea behind that is that you're going to basically, matter of fact, I'm going to illustrate this for you guys here. How do I want to do it? I'm going to do it with the old Elliott impulse. So basically, all throughout this area here, you're getting, I don't even want to do it like that actually. I just want to illustrate basically the two ways a trend can work. So you have one, a pullback on the 1, which is the 2, then you have a 3, which is a push up, then a pullback off the push up, then you have your 4. And then essentially what you're looking to do is, in an uptrend, you're looking to trade this bit, then you're looking to reaccumulate at the bottom of that, then you're looking to trade this, reaccumulate, trade this, and then in the downtrend, you're looking to do the opposite. So you're looking to trade that, you're looking to short that, you're looking to trade that, you're looking to short that, you're looking to trade that. So the point is that when we're in an uptrend, price is clearly going up here. What we want to do versus when you're in a downtrend and price is clearly going down here. So again, you want to identify the direction of the trend and then trade with the trend. So now what we're going to do in this case is, just to illustrate this, you're going to be in a trade right here, you're going to be in a trade right here, you're going to be in a trade right here. And again, this is not financial advice, it's my insights on the market, just trying to help people understand how important it is to change gears when the time is right and how to do that. So what I'm doing is I'm highlighting the areas that you're going to be in the trade so that you can understand better how to catch the meat of the trade instead of fighting the trend. Because there's 2 different ways you can trade this, okay? This is trading with the trend. You're in a long up here, you're with the market. You're on the back of the market, the coattails of the market. And then you're taking profit in this region right here. You're taking profit at the top of this wave. And then you're going to rebuy at a cheaper price. So you made profit on the way up, you sold out, so you have more money now, and then you're going to buy back here while price is lower, so you're going to use more money to buy more of an asset at a lower price. So you're basically going to make profit twice on that. You make profit on the way up, you take your money out of the market pulls back, and now you've made profit on the way down, and then you can get back in, and the same thing again, and now it's exponentially going to magnify your profits. And now on the way down, we're going to do the opposite. You're going to short on the way down. You're going to take profits prior to the bounces. So then when price bounces up, now you have more money and the asset costs more. So now you're going to use your more money and the more expensive asset to short it again. So now you're going to sell it, and as price goes down, you will make money off of that asset because you will be able to sell it back and keep the difference. So you'll have more money, and then also price will be lower. So when you do reaccumulate that asset at some point in time, you'll have substantially more of the asset because you'll have more money and the asset's cheaper. So that's the basics of it, guys, and why it's so important to trade with the trend. Because what people, I think, sometimes get caught up doing is, I think they get caught up in this mentality like they're going to trade the reversal, not even realizing it. Because we've been in an uptrend for so long, it's hard to realize when we switch. So what you want to do is you want to short right here, then you want to close your short at the bottom, and then you want to re-short at the 2, and then you want to close your short at the 3, and then you want to re-short at the 4 and close your short at the 5. Now you can keep a short going this whole time if you want, but if you start to see signs that we're likely to get a bounce, there's no reason to give back this percentage of the short only to just stay in a trade from a good position. So you can actually take a long here and essentially hedge your short position by going long and then close the long here. But that is reversal trading, which is why I say, especially for newer traders, you're better off just sticking to the trend. So as long as we're in this uptrend, you want to be playing moves to the upside, and when you're in a downtrend, you want to be playing moves to the downside. And as you can see on the longer time frames, we are in fact in a downtrend. So what we want to be doing here is shorting. Now we did already get a very powerful move, so you don't want to just enter here because, like I said, you don't want to sell into support or sell into resist. I'm sorry. You don't want to buy into resistance, and you don't want to sell into support. You basically don't want to short when you're already at a support line because the likelihood is that you'll get a bounce, and you don't want to buy when you're at a resistance line because the likelihood is you'll get rejected. And a trend reversal pattern or a trend reversal trade is essentially saying this is going to be the one time out of all those times that the trend reverses. So you're saying the trend is going to continually do the same thing. The trend is going to continually go up, or the trend is going to continually go down, but I have an edge in the market or something that's telling me not only is the trend going to reverse, but it's going to reverse right now, and so I want to get on the side of that. That is by far the hardest thing to call in a trending market, to tell when the reversal is going to come. So that's why a lot of people get wrecked trying to do that. So one of the most important things I think you should do is identify a way that you can tell the trend on a longer time frame. First thing you do every day or every week or whatever when you look at the chart is look at the longer time frame trend, identify it. Okay, we're in a bearish trend. Price is likely to move to the downside, so I'm only going to take trades to the downside. And then that way, the likelihood of a poor bounce and then you ending up in a profitable trade because it continues to sell off, or if you're in an uptrend, the likelihood of a smaller correction and then price running because you're in a long uptrend is extremely, extremely high in comparison to trading against a trend where at any point in time the bounce can get faded. So there we have it. Just want to talk a little bit about importance of trending trades and getting on the right side of the trade and trading essentially with the market. So when you get a large pattern and you're looking for it to break, if you miss the initial breakout, it's not a big deal because what you are looking for is continuation. So when we got that continuation breakdown here to the downside, that was a long trade that lasted. And then again, we're at the top consolidating. We get the sell-off. We're likely to see a bounce here, but that bounce, wherever we bounce to, is going to get faded because people are going to be looking for a good entry to short. So they're going to be shorting every time you see a bounce up. So you'll wonder why we're not getting any strength on the bounces, and you'll start to realize it's because every time the bounce gets to a decent price, someone is putting in massive amounts of shorts because the market is anticipating continuation to the downside. Well, there you have it, guys. I'm Crypto Trend Trader, just talking about trending markets and making sure that you're on the right side of a trending trade so that you're making money in this market. And sometimes it is hard to flip from bullish to bearish or bearish to bullish, but you need to identify the time frame that you're going to be trading, and you need to look at a longer time frame to see what the trend is, and then you can make educated trades based on that time frame and based on your edge, so you can be a winning trader. Remember, guys, trade with the trend. Thanks for taking a look today at Bitcoin, trending trade on the longer time frames. I am Crypto Trend Trader, signing off.